Scott, how do you keep your sizing and risk in check with so many orders given you don't look at your PnL often? Say, after a few fantasy longs hit and cut size twice, how do you know how much R you have left? I find myself having to check my PnL to make sure I am doing okay in terms of R. Hi, Jasmine. I wanted to answer your question with a video because I get this question a lot, and I think it's easier said verbally explaining it than trying to write it out. The nice thing about trading the way I do with just using trend lines and horizontal support and resistance and patterns is that not only does this method instruct me as to where I put my entries, targets, and stops, it also clearly shows me where my risk is. There is a difference between when I'm risking wide and risking tight. But as far as the math is concerned, I try to keep it very simple. The math I do, well, when I'm trading, I don't need to look at my P&L. That's not to say I never do. I tell people not to because far too many people get emotional about their P&L and they put too much meaning on their profit and loss during trades rather than planning out their trades based on the chart and based off of how much they're risking. So not only does this method give me a good way to structure my trades, but it makes it very easy to know how much you're risking on every trade if you do it the way or similar to the way that I do it. I assume you already watched my risk video on YouTube. If you haven't, you should probably go review that first because it goes over maybe some more of the basics. But I'll just explain this to you using an example. I've just pulled up a random chart on Delta, which is on my watch list for Monday, April 27th, 2025. So let's say, for example, that I'm looking at this trade, and this is the morning, this is before the open, and I mapped out my structure on the chart, and on the higher time frame I see a downtrend line that has been broken last week on Wednesday, and then we enter into a breakout pullback phase. That's how I see this. We broke the trend line, pushed up, made some new highs close to 44, and then we pulled back, we formed some horizontal resistance, and we can see a higher time frame uptrend line below. So let's say this is Monday morning and I want to get long. Well, the first obvious area to me would be this horizontal level near 41.17. I'll round that off to make math easy and we'll just say 41.20. And if I'm starting off the trade and let's say I put a fantasy order there, in my head I'm just thinking, well, how much of my 1R do I want to use on a fantasy order? You know, if I really like this trade, I can go up to a quarter of an R with the fantasy. Or I could just use a token amount, or I could use a small fantasy and say 0.05R or 0.10R. And let's say I just stick my order at 41.20, and in my head, there's no reason based off just a fantasy to stop out until it's under the trend line. So we just move our mouse to the trend line, and that's at 40.81. We'll round that off to 40.80. So you just quickly in your head, you do the math, 40.80, subtract from 40.20, that's 40 cents. So 40 cents, if I know that I'm only risking 0.10R, and let's say my R is $1,000, so 0.10 is $100. So you could just divide 100 by 40, and you know you don't have to get complicated with the math. You can round it off, round it down. I usually round it down, but 40 cents into $100 is what? It's at least 200 shares, right? We'll say 250 to make it easy. Well, I'll just make it 200. 200 shares. We know we're at $80. So I know that it's not, it's not complicated. So when my fantasy hits, I'm at risk of 80. Now I usually don't risk to the trend line. I will look at the trend line and go to some buffer below that. I should have said that up front. But in this case, the trend line breaks, and then you have another swing low over here. I'm always looking to the left. You have a swing high right near it. So below this level is a good level. So again, I'll just round off. We'll say 40.50 is my stop. 40.50, 40.20 is my fantasy order. That is 70 cents. 70 cents into $100 is over 100. I'll just say 100 shares. So I have fantasy for 100 shares. Now, let's say my fantasy hits. Now I know I'm at risk for $100. I don't forget this stuff. I just do it in my head, but you could write it down. Keep a paper for each stock you're trading, and just write down, okay, I'm at a risk for 100. So then it comes here, and then it stops, and it's just bouncing around, and it holds. I'm like, okay, well that's good. It's holding this line. I want to do another ad. I want to bring it up to, I don't know, you pick, but let's say half an R. So if my R is $1,000, I know I want to be at 500 risk. Where am I risking to? Probably the same thing. So we're at 420, and my risk is down at 4.5, 70 cents. 70 cents divided into 500 is more than 500 shares. But again, I'll round down to make it easy, 500 shares, right? So I'm at a half an hour risk, and let's say I want to wait to get full size. Either we get another pull and we test the line and it holds, the higher time frame trend line, that is, or we spend more time and it still holds the 4120. Okay, so at some point in my head, I know right now I have a half an hour exposure, and at some point I'm either going to get to full size here, get to full size here, or I could get to full size on the downtrend line break. So whatever happens, I have a plan. And if it just hovers here and then let's say it pulls to the higher time uptrend real quick and then starts to turn. Okay, so now we're at 41. I know my risk is down at 40.5, so we're at 60 cents. At any point, I could make the decision to do a tight risk ad. Now, as you probably know, I treat those different. So with a tight risk ad, I'm just thinking separately. I'm going to hold my core position until my ultimate target. I should have mentioned that in the beginning, but my ultimate target, let's say my T1 is up here. First target is at 43.75. That's what I'm hoping to get. I'm going to hold this tight risk ad to that target. It's going to become part of the core. However, with risk, I'm going to treat it very different because it's going to have its own stop. So let's say that it's still hovering at this 41, and I want to get real tight with it. Let's say it dipped down to 41.10, and I only want to risk 10 cents because it's just not going anywhere. It's just hovering right here. So 10 cents I only want to risk and added on my tight risk. Okay, so the theory behind tight risk ads is that you're on the lower time frame. You see a level that you think it's going to hold, and you really want to push up your size yet contain your risk. So if it's hovering around 41.10 and I want to get real tight and only risk 10 cents of a tight risk ad, I can use, say, 0.10. But 10 cents into $100 is what? 1,000 shares. So if this little tight risk ad doesn't work, it's only taking away 0.10 R from my trade. And yet, it's twice as big as my half R position, if you follow me. But if it works and it goes all the way to target, which would be the goal, then you can do the math. You get your RR becomes extremely high, and yet you only added a small amount of risk. By doing it this way, you're never going to jeopardize your most important aspect of trading, which is controlling your risk on every trade. The One of the biggest problems, if not the biggest problem I see with uh, newer traders or even traders that have been trading a long time but never hit consistent profitability, is their ability to manage risk. And you've heard the saying that we're risk managers. So this is how I came up with a method to control my risk using the chart. So just so you understand, my lines are my trading plan. They also are my risk management. And however you have to do it, if you want to use a calculator, that's fine. But I think the way I do it in my head, I keep the math very simple. I'm just thinking about my core position, or how whether I'm wide risk or tight risk. If I want to push at a certain level and get my risk really tight, those ads must be fractional R's, and I know how much I'm taking away from. See, I think of my R as my spending allowance, like my parents gave me when I was a kid. So this is how much you have to spend on this trade. Once you're fully committed, you're fully committed. You can't really do anything else. So you have to be careful with how you step into. I try to work into my risk. Now sometimes the setup is so good, I'll just take a shot and you know just say, hey, I'm gonna take my whole wad, my whole 1R, and I'm gonna die on this hill. I'm gonna enter right here, and if it goes and hits my stop, then that's it. Trade's over. So I hope this helps. I often think that when I write this stuff that people understand it. It's simple, but a lot of the feedback I'm getting is that other traders still really don't understand how I approach risk. But hopefully this helped.